Welcome back. You're watching Indian Open. Let's take a look at the Asian markets for now, which are showing us mixed cues, with the Nikkei marginally in the green, but some weakness coming in when it comes to the Shanghai and Hang Seng, both trending lower. But what does it mean for the SGX Nifty? Well, likely to see a drop of 0.3% according to indications, well below the mark of 10,600. Let's also take a look at what the derivatives sector is showing us and giving us an indication. Now we have Navneet Saluja joining us to give us the same. Good morning, Navneet.
Good morning, Agam. Well, the cues are not looking that great this morning. If you look at what happened yesterday, the discount on Nifty futures actually widened. So this is SGX Nifty, which is currently trading with cuts of almost 30 points. And the build-up definitely was there for Nifty futures. Open interest was up nearly 4%. That tells you there were some fresh positions being built up. And this is the discount which widened to almost 30 points. Watch out for the 50-day moving average for today's session, which is somewhere about 10,530. That's a crucial mark. Remember, yesterday we did breach the 20 DMA for Nifty. We'll have Bank Nifty now. This is going to be in focus because this index has been underperforming in the last two sessions. Tomorrow being the RBI policy, definitely we'll see if there is more selling pressure which comes in today's session or not. The discount is almost 67 points, but there was some long positions being unwound for Bank Nifty futures as the open interest went down. Surprisingly, India VIX, despite of markets falling a lot, only 2% rise was seen for India VIX. So 13.8 was the level for India Volatility Index. The Nifty PCR has been falling. The reason for that is there is more call writing which is visible in the system. Nifty PCR went to levels of 1.39. Most importantly, watch out for Bank Nifty PCR. That fell to levels of almost 0.6. Pull up the option strikes for June series. We'll tell you why exactly the PCR fell. So there was more call writing seen around the mark of 10,700, 10,800. Remember, the range which one is looking for in the June series is somewhere about 10,200 to 11,000 because that's where the maximum open interest rate is. Pardon me. In terms of what did the FIs do, some respite because there were long positions seen, but let's not forget they're still net short for the June series in terms of index futures. Pull up the options data. In the last two trading sessions, they've been adding more of short. So yesterday the trend was similar. They added nearly 20,000 contracts on the put long side and almost 15,000 contracts on the call short side. So they've been buying a lot of protection when it comes to the options side. In terms of stock futures, with stocks to keep an eye on, Sun TV was quite active despite of markets being weak. So we did see some bit of short covering coming in because the open interest fell for this one. The other stock to keep an eye on will be PC Jewelers. That fell nearly 16 to 17%. Fresh short build up was seen for PC Jewelers, which closed around the mark of 130. And finally, watch out for TVS Motors. This fell nearly 5% in trade. There were some fresh short positions being built up on the future side for TVS. Back to you guys.
Hey, Navneet, Agam, both of you, just wondering if you've looked at what happened in HDFC Bank yesterday. I looked at the cash market performance and the delivery volumes were higher. And I'm looking at the FI participation in the cash market, that seemed higher. I don't know, it's difficult to put two and two together, but I try to speak about that. But I don't know what the positions were there in the futures and options space if you guys looked at HDFC Bank carefully.
Neeraj, this is the future for yesterday. HDFC Bank, it closed at a discount of 12 points and 5% higher. So intraday, definitely there was heightened activity. The open interest was going up, but towards the end, there was some unwinding of position. This suggests there were fresh short positions, but 5% for a company like HDFC may not be too high. I think more action for HDFC Bank was felt on the cash side because there was some delivery buying which was seen.
Yeah, 62%. And say that when it comes to the cash markets, the percentage of delivery was at around 63%, which is relatively lower than the average. So a lot of that was towards speculation, which means that there is a slight chance that we could see some recovery, perhaps some short covering on the basis of the shots that we saw yesterday.
And typically, Neeraj, whenever you see correction in something like HDFC or HDFC Bank, after a few days, there is some buying which comes at lower levels to give that support.
Yeah, let's see. For a long time, in the first 3 months, remaining an underperformer. Let's see if there's a buying today. But this is only stemming from the conversation that we were having at Countdown yesterday, that the trade in HDFC Bank would be interesting to watch out for. Thanks for that, Navneet. HDFC Bank in focus. Mayuresh Joshi, fund manager at Angel Broking, is with us. So much to talk about. Since we are all dwelling on HDFC Bank, Mayuresh, let me start off with that. Very good morning to you. What did you make of HDFC Bank? The expectations was that the window will open and there will be a flood of money that will come in. Maybe it did come in because the FI volumes did look a bit higher in trade yesterday. the cash market volumes. What did you make of HDFC Bank the last 3 or 4 sessions? And within the private banking space, what would be top of the pecking order?
So morning, Neeraj. No, again, I think the kind of expectations of inflows coming in over the past 3-4 days, I think it was a well-gestated fact by the markets itself. And you did speak last week also, and my thesis was that post this event, you're probably going to go back to fundamentals. So as far as the fundamentals of the bank are concerned, very strong footing, no two ways about it. Cost-to-income ratios are dwindling downwards. You're probably looking at a very strong loan growth in excess of 22-23% being consistently maintained over the next few quarters. The kind of retail base that the bank has and the kind of fees that it generates, even on the non-interest income part, I think it's commendable for the size and the kind of patterns that it exhibits. The other element in terms of the earnings trajectory being in excess of 20% with very manageable GNPAs, NPAs and NIMs getting maintained obviously gives it that edge in terms of a price to book parameter. So to that bit again, I think the expensive valuations for the bank are here to stay. But largely again, I think you probably need to wait for declines. The market will give you opportunities to probably enter at lower levels or probably have a staggered way of investing into the stock. So yes, I think it looks very, very attractive from a medium to long-term perspective. But apart from HDFC Bank, as you asked, from the mid-cap universe, RBL Bank is something that I'll still be very, very hopeful about. The kind of loan growth that the bank has exhibited, I think again it's very, very commendable. And again, I think the asset quality pressures, which are probably far more evident in corporate-facing banks or even the PSU banks, are not that evident for the private sector. The retail advances have grown to 41% of the overall book. The CASA ratio is inching up, it's around 24.4%. So there are all the signs that you're probably looking out, both in terms of advances growth, you're probably looking at a very stable asset quality picture, cost to income again dwindling down, the provisioning ratio inching upwards, and that is a very, very comforting sign. So yes, NIMs getting maintained around 3.4, 3.5, adjusted book parameters compared to its peers, a little bit on the higher side, but with strong capital adequacy, growth prospects are here to stay. So I think RBL Bank from the mid-tier banks, Yes Bank and ICICI Bank, these probably are our top picks within the banking universe.
Mayuresh, good morning. How are you viewing and reading the kind of volumes that we've seen from the auto sector? We have seen good volumes come through for the likes of Maruti Suzuki, Bajaj Auto, but not as much for TVS Motor Company. That has turned out to be a little bit of a disappointment. How are you reading these trends right now?
Morning, Argam. No, so clearly I think the auto sector is somewhere that I have remained very, very optimistic about, and I do remain very, very optimistic going ahead as well. 2 to 3 factors that need to be watched out. A, I think the kind of volumes that we've probably seen for the month gone by, a clear demarcation has to be done between how the two-wheelers have fared. Now, even within the numbers itself, Bajaj Auto surprisingly had a very good show. I think the run rate that it probably had in Nigeria, which is its key export market, and the management commentary surrounding that these volumes might sustain is a very encouraging sign. What you're also looking from a two-wheeler perspective is also the monsoon. So any companies which are probably catering to rural, semi-urban demand with expectations of the long period averages being very, very average or below, above average this time around, you're probably going to see discretionary income spends probably exaggerate in the second half. So the volume growth picture that you're probably talking about can actually favor stocks like a Hero MotoCorp. What it also does in terms of anticipated buying, and what you've probably heard, even for a lot of these CV financiers, CV makers, used CV financiers, I think there is a rub-off effect happening on that front as well. So yes, I think even the CV volume growth, both in terms of MHCV segment as well as the LCV segment, actually look very, very promising going ahead. The tractor growth also looks very, very promising. So I think a lot of managements have again initiated the fact that an 8 to 10% volume growth probably not ruled out on the base that they were working on. So again, within these spaces, Ashok Leyland probably still looks very, very reasonable in terms of a strong earnings momentum that it push. Four-wheelers, Maruti still remains a top draw. What you've probably seen in terms of volumes that it exhibited, the growth can be very, very strong for Maruti going ahead as well across its variants. And again, the fixed cost absorption for its Gujarat plant should actually start coming through more meaningfully And as that happens, I think the leverage should start playing on their balance sheet. So again, I think the ancillary play in terms of NBFCs is also looking very, very promising. So I think L&T Finance, Chola Finance is also something that I'll remain optimistic about.
Okay, hold that thought, Mayuresh. Let's go across to our research team and address some of the stocks in news, and as well as several sectors which are in focus. We've also had some news with respect to Biocon and some brokerage calls too. We have a research team joining us. Good morning, guys. Darshan, let me start off with Biocon and its development right now.
Yeah, so basically what happened was yesterday was the target action date for their key drug, pegfilgrastim. It's a drug that's been jointly developed by Biocon and Mylan. Mylan as the front end is their drug. Biocon will be the manufacturing partner. There are a couple of things. First of all, the approval comes in, which is extremely positive because it's a large drug. $4.2 billion is the market size, and they're the first biosimilar to get it. No doubt it will be a gradual ramp up, but it will be a product wherein they will get significant amount of revenues with high margins. Now, how does this affect Biocon? Biocon will be getting a part of the profit with high margins. The revenues that they will generate will be the supply of drugs to Mylan. So the higher Mylan scales up its operations in this drug, the more money Biocon will get. And second important factor is that this allays any fears of the Bangalore facility, because they had gotten a U.S. FDA Form 483 with 7 observations a couple of months ago, which actually put a spanner or indicated that there could be some trouble for the Bangalore facility, because that is where this drug will be filed from. Now, since that the FDA has cleared this drug, and it means that the facility is automatically cleared. So it's in a way it's two positives for Biocon coming in because of this approval. Expect the stock to react positively today.
Right. And Nikki, what are the other stocks in news today?
To start up with Sunteck Realty, which has been seeing actually a decline past 2 to 3 consecutive sessions, might just see an up move given that FI limit has been hiked for this counter to 49% from 24% earlier. Also, we have Idea Cellular, where DOT has given a nod to increase FDI limit to 100% from 67% currently. In terms of buyback, we have Wiseman Forex, which is expected to buy back as much as 4.4 lakh shares, or a sum of 3.82% equity for 702 per share, which means an indicative upside premium to the current market price of 25% from the current market price. Jagran Prakashan is also expected to buy back a good for 5% equity at a price of 195 per share, which means an 18-19% premium to the current market price. Some reaction on back of that. In terms of MCX, which has signed in an agreement to acquire 24% in CDSL Commodity Depository. Also, we have some business divestment in terms of Sudarshan Chemicals, which is a small cap company with a market capitalization of 3,000 odd crore, has divested one of its division, and is also expected to invest around 1,000 odd crore over the next 5 years. Maruti Suzuki, we're tracking that particular counter on back of the production development, where the monthly production numbers have registered a 22% uptick. We also have a regulatory note coming in for Lupin for a small cream which is used for infection, and then you have a fund infusion for Kajaria Ceramics, where Westbridge Crossover has invested a sum of around 65 odd crore.
Thanks. And Yatin, we have an investor note today.
Yeah, so that is on Shriram Transport Finance. They have not been bullish in terms of the outlook. Of course, we have the growth in commercial vehicle sales, but Shriram usually finances the second-hand market, so to say. Now, you have Investec, which has downgraded Shriram Transport to sell from a buy rating. However, the target price has been raised to a level of 1,500 from the earlier level of 1,340. Investec currently believes that the used commercial vehicle pool might see muted growth, because we are looking at growth which is happening in the new, and the fresh buying which is happening in the commercial vehicle space. Also, the new BS, 4 vehicles are structurally efficient, which means that there is more likelihood of switching into better efficient and better machines in terms of the commercial vehicles. And also the only silver lining that Investec believes for Shriram Transport would be the scrappage policy, and that would probably boost the used commercial vehicle pool as people scrap their older vehicles, look out for better used commercial vehicles or buy new. So in that case, probably Shriram Transport is one stock wherein Investec believes that investors should stay cautious, and they have downgraded it to a sell now.
All right, thanks guys for bringing us those details. But I'm going to take the point forward on NBFCs forward with you, Mayuresh. You did briefly allude to those NBFCs which are facing the auto sector. How would you rate the microfinance sector and the housing finance sector in the NBFC space right now?
No, so to a large element, Argam, what probably happens in terms of the expectations of an RBI rate hike and the corresponding effect in terms of those rates actually hardening for a lot of NBFCs who borrow in terms of bank borrowings. Yes, it does create some amount of upheaval as far as the bank borrowings are concerned. But a lot of NBFCs probably have a very diversified borrowing mix at this point of time. So if you look at their borrowing mix, generally, I think you've got bank borrowings, you've probably got NCDs, you've got commercial papers there as well. And some of this is again coming in for repricing. So the impact in terms of the costs probably moving up and the kind of impact that it might have in terms of passing this through, I think a partial pass-through is very much possible, and that, in my opinion, will not have a huge detrimental effect in terms of the advances growth. Now, otherwise, in terms of a macro environment where yields or the RBI rates are expected to go higher and higher, I think the situation probably warrants how data points will pan out. If monsoons are better, as I said, I think food inflation might be very well under control, including pulses, and that might give the much needed relief for RBI to not have that kind of a thought process. So I think it's a process where you're probably talking about the spreads not getting detrimentally affected significantly for these NBFCs. And the well-capitalized NBFCs, in my opinion, is something that can really do well. So where the capitalization levels are extremely robust, I think the advances growth can still continue without taking a hit on their book. And with that respect, in my opinion, I think L&T Finance, Chola Finance probably stand out.
Mayuresh, what do you made of Biocon?
So Neeraj, again, I think the kind of developments that Darshan was pointing out, I think there is a huge potential, and I think the market has gestated largely the kind of impact that these biosimilars and their respective launches over the next few years can probably have. What you've probably seen in terms of numbers, the small molecule segment, which contributes more than 35% to the overall top line, you've probably seen sluggish growth there because the generic pricing pressures are still continuing. What you've probably seen in terms of Syngene's contribution, which contributes 33-35% as well, I think the contribution can be significant going ahead. And again, the R&D spends, specifically in terms of the research unit that Biocon is and has been undertaking, I think that is significant in terms of the biosimilar pipeline that it has created. In terms of biosimilars itself, pegfilgrastim, I think, has a huge potential. So do the other drugs in the pipeline. So again, I think the large element in terms of its Malaysian facility and the interest and depreciation expenses and the greater probability of the fixed cost absorption improving over the next few quarters, that should augur well. What probably happens with its Bangalore facility, I think that will be an interesting nodal point for Biocon going ahead. But generally, I think the earnings growth for the company should be quite stable going ahead. And the pipeline itself and the research unit should probably offset the weakness that you'll probably see in the small molecule segment and the branded formulation segment. In terms of valuations, probably on the higher side. But again, I think if these numbers start coming through as one really expects over the next few quarters as Biocon is in the inflection stage, I think you're probably looking at forward multiples for this company, which can sustain its premium valuations. So anybody holding on to the stock, clearly hold on.
Right, Mayuresh, sticking with the pharma sector, and all clear for Dr. Reddy's Srikakulam plant. You've also seen a lot of traction in Lupin as well. Is the worst behind for both these large cap pharma companies?
So I think for Dr. Reddy's Argam in particular, I think Srikakulam actually has given it the much needed respite that it wants. But I think the Dwarda facility is something that is going to be extremely critical for Dr. Reddy. Now, going by the trend of how the FDA actions have been over the past few weeks and months, there is a high probability that over the next few months, a lot more facility clearances can actually happen, and a lot more remedial efforts have actually also gone from the pharma company side. So if you look at the remediation costs that these companies are incurring, they're dead serious in terms of getting these approvals ASAP. Having said that, again, the kind of approvals that have come through specifically from the U.S. FDA side on the generics business, and what probably happens in terms of Trump announcements where he's actually asking for voluntary price cuts to be taken by a lot of these pharma majors, and where we all know for a fact that the pharma lobby is one of the strongest lobbies globally. I think it's going to be very, very interesting on that aspect. The second element in terms of pricing pressures, I think that has been very, very evident in terms of earnings cuts for a lot of pharma companies, both locally as well as globally. So to that bit again, I think very few estimates for strong earnings growth as indicated by the management. And as you rightly pointed out, I think if you hear the Lupin management time and again, they're still pointing out for softness to probably continue for all these factors. But in my opinion, yes, I think selectively this sector probably looks well placed. Healthcare as a sector, in my opinion, should do well in spite of pricing pressures, in spite of what we've probably seen over the past few quarters. Niche approvals coming through will give it the edge. Companies who have these niche formulations and the niche approvals in the pipeline, in my opinion, should really do well over the next 2 years.
All right, let's get in our technical experts then. At this point in time, we have Hadrien Mendonca, Senior Technical Analyst at IIFL, joining us. Hadrien, good morning to you. Let's start off with your view on the indices right now. How are you placing your bets here?
Yeah, good morning, Agam. So, definitely yesterday's, session that we saw was a little more worrisome. So, the two important things that happened in yesterday's trade. So, first one is that Nifty has failed to surpass the declining trend, declining trend line of the overall symmetrical triangle that Nifty is placed within right now. Secondly, the Nifty has also formed a bearish engulfing pattern on the daily charts. Now, this bearish engulfing pattern has not only engulfed one but two previous trading sessions. That indicates the way selling pressure has emerged near the top of the symmetrical triangle. So I think I would go bullish on the Nifty only if I see the Nifty surpassing the 10,770, 10,800 zone. That is, once I see this symmetrical triangle breakout. On the other hand, the second point where I would go bullish is around the 10,500. That's the lower end of the overall triangle. So these are 2 points to watch out for if anyone is wanting to go bullish on the markets. But till then, it's going to be a difficult ride, towards the support zone of 10,500. Now, leaving the index aside, index management has completely been deceiving the overall markets, and the way, the mid caps and small caps have been thrashed in the past week or so. These are not good signs. Advanced decline has constantly been on the favor of the bears. And if you do a recent chart check, the small cap index has actually broken down from this distribution pattern, and mid cap index is also on the verge of doing the same. So I think the pressure on the mid and the small caps are going to is going to get extended even further. And if the index also starts participating, then it's going to be a difficult ride ahead.
Yeah, it is looking slightly choppy for the mid-cap space for sure, and as we highlighted in the first one segment as well, even funds are not spared. Naturally they wouldn't be, but even funds are not spared, and the NAVs have really collapsed. We'll talk about some individual stocks with Hadrien, but first, time for our special segment Bloomberg Edge, wherein Jayesh Kilani tells us about a pattern when the Bloomberg terminal is thrown up on a stock. And Jayesh, what's the stock that is coming up today?
Morning, Neeraj. Before going to the stock, just want to recap that last week we had done a chart of the day which showed that the pharma index performs very well over the course of the entire month of June. So this is an extension of that. The Bloomberg terminal has thrown up a buy indication on Dr. Reddy's, which could lead the pharma index higher as well. So this is based on the MACD indicator, or the moving average convergence divergence indicator. Let's have a look at how it works and what are the conditions that you have to keep in mind. It's a momentum indicator which shows you the relationship between a 12-period moving average and a 26-period moving average, and there is a signal line also which gets plotted. So the MACD line and signal line are the two that you have to watch out for. What they essentially do is help you to identify where the turning points can occur in a trend. So you buy when the MACD line crosses above the signal line, and you sell when the MACD line crosses below the signal line. Let's have a look at the chart of Dr. Reddy's. What you can see is the last 1 year how the price performance has been, and you can see that there has been a constant decline, and currently we are very close to the levels that were clocked in last July and August. From there, we did see the stock bounce back. The bottom panel shows you the MACD indicator, and if you zoom into this, you will see that the blue line has in fact crossed above the white line, which means that there is a potential buy signal on the cards for Dr. Reddy's.
Well, Jayesh, how would you place the probabilities based on your past experiences?
So, Agam, I backtested this indicator for Dr. Reddy's, works quite well. The net profit would have been about 18% for all the indications given on the long side.
All right, Jayesh, thanks for that. We'll watch out for Dr. Reddy's Laboratories, which has been showing strength in the recent past few days. That said, Adrian, can you take us through your top picks for the day? What are you betting on today's day of trade?
Yeah, sure, Agam. So Arvind is a stock that is looking pretty weak, and I think it's on the verge of breakdown from a head and shoulder pattern. Secondly, we are also seeing negative crossovers that are indicating that further weakness would get extended. So I think one can go short on Arvind June futures, play for a target of 371 and keep a stop loss at 384.5. The second stock that we are bullish on is Jubilant Food. Now this is trading in its own world. In fact, it is maintaining its higher top higher bottom structure very well. And if you have noticed, the 50-day moving average has previously acted as a very strong support. And in yesterday's trade as well, it has bounced back from the same levels. So I think Jubilant Food, stands to be a good outperformer from here on. And one can consider buying Jubilant Foods for a target of 2630 and play with a stop loss at 2527 in the short term.
All right. Well, let's also welcome in Rahul Shah, Vice President of Equity Advisory at Motilal Oswal. Rahul, good morning. Thanks for joining us. How are you approaching trade on the indices? While one might say that it has been volatile, it's still also range bound.
I think interestingly what we've seen is in last few sessions, I think though indices moved up, but it was only few stocks factored in, which were the index heavyweights. We made the index moves, and we saw some kind of unwinding in yesterday, and same impacted on the Nifty as well as Bank Nifty. So interestingly, when we talk about Bank Nifty, so I feel that yesterday it was a good volatility we've seen in the BankX, and I think the heavyweights in BankX have been seeing pressure yesterday. So my sense is 26,250 was a good level as a support for a Bank Nifty, and I think it is near, and if it is near to, I think it can, way the stocks have reacted, I think it will be broken today. So the best strategy to play on is to buying up puts of 26,000 to play the downside on the BankX.
Rahul, I'll appreciate you accommodating this last minute request as well. So in light of all of this, what is it that you believe investors could do, either in terms of trade on the Nifty Bank or the Nifty? And if you guys are recommending any specific stocks out this morning?
I think Bank Nifty, as I discussed, that we've been recommending puts. Nifty front, I think if we talk about, I think again Nifty, if on an expiry day we saw good longs, what we've seen in the Nifty front, but I think it was scattered only to a few stocks, and a lot of sectors were ended in negative that day. So I think it was not a broad-based participation. So again, Nifty might be in a range bound. I don't see a major downside in Nifty, but no upside also in the near term. So Nifty could be sluggish. I think I would avoid Nifty and play on a negative side with the BankX. Coming to stocks, I think auto space, we have seen a mixed bag post numbers, but I think in that play post quarterly results, I think M&M had done quite well, and I think stock is closer to its near term high also. So I think I would go long on M&M. I feel that stock can reach new highs. I think 960 is what the target, what I feel in near term.
Interesting. Mayuresh, out of the stocks which have been put under the additional surveillance measures, and actually I would want Rahul to weigh in on this as well, but the stocks which have been put on the additional surveillance measures, are there any which fundamentally to your mind are strong enough, and if there is some serious price damage, then people should watch out for them?
So large element, Neeraj, in terms of the ASM mechanism coming through, yes, I think it does create some amount of upheavals. But I think we ignore all these factors if you're a genuine long-term investor. My own sense is that if you're probably looking at certain sectors and certain stocks within those sectors, I think you're probably looking at quality at this point of time. And again, the bias with all what is happening from a macro perspective is still getting influence towards the large cap universe and a very qualitative mid cap universe. So that's always been a thesis. I think we'll stick to that point.
Okay, Rahul, what have you guys made of the technical correction that has happened into some of these names, and is there anything that people should keep an eye out for from this ASM stocks?
I think, Neeraj, interestingly, what we gather is that I think the lot of stocks, I think that because of the technical factors like your the margins, 100% margins and all these things. So we've seen some kind of positions getting reduced from the client perspective, and I think even the stocks are reasonably priced in for the corrections. But I think because of all these reasons, we might see some more downside because of these technical factors. But the stocks, what we've been liking in that space, I think Rain is one stock, what we've seen a decent correction. So Rain is what we've been liking from that space. HEG is one stock which we've been liking in that space. Avanti Feed is from that space. So I think those 2-3 stocks had a reasonably good correction in near term. So I think this appears to be a good bet from the current levels as well.
Okay, we have about 2 minutes left for pre-open. Mayuresh, over the past couple of days, the stock of Infosys has been a clear outperformer, not only against the Nifty IT index, but also the Nifty. How are you viewing the large cap information technology stocks right now?
No, so I think growth has been very reasonable, Argam, for the year gone by. What you're probably reading in terms of management commentaries is that growth should probably sustain both in dollar as well as constant currency terms. Having said that, again, the kind of deal wins that one really is talking about, specifically for the large cap universe where the orientation is more towards BFSI, I think that space is something that will probably determine the realization as well as the growth aspect for these companies going forward. Now, as we see it and as the corporate tax cuts actually become more of a reality within the US markets, I think the discretionary spending patterns should largely improve for this space. What you've probably seen in terms of retail, healthcare, the lifestyle businesses have shown a huge uptick. I think the only laggard probably has been BFSI, and that should show significant signs of improvement over the next few quarters. We'll obviously have the element, Argam, of wage hikes probably eating into the EBIT margins of a lot of these companies, whether large or mid caps. But a large element in terms of how these companies will perform in terms of utilization levels, with orders stacking up happening quite strongly. And again, I think a strong momentum that we've probably seen across their customer base, right from 1 million to 100 million for large caps, and the 1 million orders even for the small niche mid-cap companies. So selectively, I think, yes, this sector looks poised for a reasonable amount of growth. The moment in terms of prices has been very sharp. So I think valuations probably a little bit on the higher side. But I think the growth should probably sustain selectively within stocks for the sector.
Right, well, it's about 15 seconds to go for pre-open rates to come in. And let's take a look at the Asian markets. Largely mixed, flattish moves for the Nikkei as well as the Shanghai indices. It's the same for Hang Seng too, as a matter of fact. But, well, the SGX Nifty is continuing to decline downwards by as much as 0.3%. What does it mean for our own indices? Well, we are looking at an uptick for the Nifty 50, marginally in the green, and it is the same for the Sensex, but we're going to have to wait for some of these rates to stabilize and settle down. Let's take a look at Maruti Suzuki. We've had the production numbers come in, and it's been a substantial rise too. And we're looking at an 0.8% increase in pre-open. Idea Cellular, of course, we've also seen the FDI limit. Well, the board has approved an increase to 100%, and on the back of that, it seems like we could see some strength come in, 9% uptick in pre-open rates. Let's also pull up some of the key gainers in yesterday's GF trade. So Dr. Reddy's, see whether or not that continues to see an up move. Well, it's actually looking at a down click of around 1%, but as I said, we're going to have to wait for some of these rates to stabilize. Also take a look at Lupin. Lupin was the other counter which was aiding the pharma index upwards yesterday. Let's pull up Wipro as well. We've seen Credit Suisse upgrade Wipro, and it's also put in a price target of around 275, about 15 points higher than the current market levels. And Infosys, which has been outperforming some of the indices over the past few days, continues upwards at around 1242. These are some of the stocks I'm tracking right now, Neeraj.
I just want to revisit Biocon, Agam. 10% up at 720. Don't know if it will be 10% or 8% or 5%, but suffice to say, Biocon will start off in the green. So that's good news for investors out there. Interestingly, iShares is showing a big uptick. Don't know if it'll stay at 3% higher, but let's wait and watch. The first couple of minutes it's showing that. Maybe it'll change a bit. And a lot of talk about some package for sugar. Now, whether it's 5,000 crores, 15,000 crores, 20,000 crores remains to be seen. But I mean, unless it's a really major package, don't quite know how will the markets react to these news, but the sugar stock certainly starting off with some bit of green on the screen today. We were expecting this yesterday, some bit of green in the session today. Let's wait and watch if this continues. I would guess all of those stocks under the additional surveillance measures would be having some bit of pressure points even right now, maybe in early morning trade as well. The HEGs, graphites of the world, which were locked on a 5% lower circuit yesterday. Venki's down about 5%, but HEG and graphite and some of the others continue to grind lower. Let's see if these rates change in today's trade. The rupee, 67.07 was the close yesterday, if I'm not wrong, and it's at 67.12, so not too much. The bond yields, which were at 7.88, let's see if there is further hardening. No, not quite. Let's wait for the policy tomorrow and the statement, more importantly. Okay, 9:02. Let's get in that time of the show when we tell you about the big brokerage calls for the day, and Somit Sarkar Johnson with precisely that. Somit.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is Morgan Stanley on Interglobe Aviation. Now, the brokerage has maintained its equal weight rating on the stock with a target price of 1,205. Now, according to the brokerage, the proprietary airfare tracker is indicating that the yields would remain weak in the first quarter of financial year 2019. Now, though jet fuel prices are up nearly 27% compared to last year, airline companies are not raising fares enough to offset this rise in fuel prices, according to the brokerage. Also, going forward, that is in the second quarter, yields are expected to remain weak because of a seasonally weak demand, and thus the industry is hoping yields to recover from the start of second half of financial year 2019 with the start of festive season in October. Lastly, the brokerage expects the yield to fall around 8% for Indigo compared to last year. Second, we have a Credit Suisse on Indian IT sector. Now, according to the brokerage, year to date, the Indian IT sector has outperformed the benchmark due to under ownership by institution, high valuation in many sectors in India, hope of growth of pickup in the IT sector due to improving US and global macro and INR depreciation. However, the fundamentals are the same largely for the large companies, but have been revised upwards for the mid-sized companies for financial year 2019. Now, the brokerage has raised target price for a bunch of large and mid-cap companies, but has changed the rating only on 3 stocks. Now, for Wipro, it has raised the rating to underperform has raised the rating to neutral from underperform, and has also cut the target price on two of its stocks, that is Hexaware. It has cut the target rating to underperform from neutral, and has cut the rating on NIT Tech to neutral from outperform because of expensive valuation. Lastly, it says that Tech Mahindra, HCL Tech, Persistent and Cyient are the key stock picks.
Okay, thanks for that, Somit. We'll watch out for some of these IT companies. We have seen some changes from Credit Suisse point of view on the IT sector. But Mayuresh, I want to take up aviation with you. Healthy load factor trends, but a 27% rise in ETF. Would you avoid this sector as a whole?
No, Arakam, again, I think a large element in terms of ETF prices moving up. I think it's also a foregone conclusion with crude moving up. ETF prices would have moved in the same direction. So again, I think in terms of the cost per available seat kilometer, including fuel, I think that does take a significant amount of hit. What it also does is a lot of aviation companies have probably reported earnings in dollar terms, as well as their expenses are accounted in dollar terms. So the rupee depreciation of what you've probably witnessed over the last few weeks and the increase in crude prices, I think that's a double whammy in terms of the expenses, including fuel, actually going up. Now, a lot of managements are very, very hopeful of their CASK, or cost per available seat kilometer, excluding fuel, actually getting optimized. But they don't have any other option. I think they need to optimize these costs if they need to maintain their yields. Coming to the revenue per available seat kilometer, what you've probably seen over the past few quarters and a large belief of the pass-through of the increase in input expenses, specifically crude. I think that might have some amount of leeway in terms of how they're probably looking at realization growth. But yes, I think two factors which have worked in their favor is the available seat kilometer, which has grown exponentially. What you've probably seen in terms of air traffic growth being sustained at higher levels, and the key indicator again is load factors. I think that should probably be a sustainability factor for these companies. So a large element in terms of their earnings growth is dependent upon ETF prices in terms of the regulatory charges, so on and so forth. So to that bit, I think the cash flows always are a little bit cyclical in nature. But again, I think I'll not be paintbrushing the whole sector as being something that can be ignored. So something like a SpiceJet on declines is still something that I'll continue, where my belief is their EBITDA margins should probably hold up, or they're probably accounted for in terms of exceptional items in the quarter gone by. I think, and the kind of growth parameters that they've exhibited, both in terms of load factors, in terms of the routes that they cater to, and again, I think the local scheme in terms of local routes opening up, that should augur well. So I think SpiceJet is something that I'll continue to remain optimistic about, but the time horizon are obviously a little bit more longish in nature.
Okay. As the pre-open rates look like settling down, the top gainer seems to be Bharti Infratel. iShares has some gains. The top loser seems to be State Bank of India, at least on the Nifty. At the broader end of the spectrum, we don't have too many stocks which are really making big moves. A clutch of those names, the Manpasan, Radico Khaitan, PC Jewelers, JBF, but the top loser is down about 5% on the BSE 500. The top gainer is Biocon, which is up about 6%. Hadrien, Mendonca, Biocon, if it starts off about 695, 700 odd, is there a comfortable trade in Biocon?
No, I think if it opens up, around the 695, 700 zone, I think one should really not try to jump into the trade and try to, buy the stock abruptly. I think it is always better to, have a wait and watch kind of a, scenario where you can, get some comfort, let the stocks, settle, let it, find its value after trading for the first half an hour or so. And if we get a little bit of correction or a small downtick on a Biocon, then one should consider. Otherwise, jumping in abruptly at the opening trades is not a good thing to do.
Rahul, I also want to address Infosys. Over the past few days, a lot of technical analysts are suggesting Infosys. Are you also expecting this outperformance to continue?
I also feel that IT will continue to do well. I think way the stocks have fared in last few months, I think the rally is still on. But I think mid-cap IT stocks will, take for a consolidation. They have run up quite sharply, and I think that there's no event left in near term. So I think they will start consolidating. But yes, large-cap IT names, vis-a-vis the mid-caps, they've underperformed. And I feel Infi remains the top bet, and as well as the valuation gap between a TCS and a Infi is huge, significant. So I think Infi should remain in a focus. The investors should look into it. And near term, I think the risk to reward again is favorable for IT stocks. So I think Infi, I feel, could do well. So another 6-7% move in Infi is warranted.
Okay, stay on, Jamin. 5 minutes left to market open. Let's tell you all that you need to know to stay ahead in trade today. Biocon is a stock in focus today as Mylan's Biocon's biosimilar drug receives approval from the U.S. FDA.
And Cellular gets approval from the Department of Telecommunications to increase the FDI limit from 67.5% to 100%.
In brokerage calls, Credit Suisse upgrades Wipro to neutral, downgrades Hexaware to underperform, and NIT Tech to neutral as well.
Investec downgrades Shriram Transport to sell from buy, sets price target of 1,500 rupees per share.
Amongst companies that are meeting funds today are Greenlam Industries, Tata Chemicals, as well as Indian Hotels.
And Indiabulls Real Estate's buyback worth 624 crore rupees opens today.
We could have well included the sugar names out there. It's just so patchy to talk about this move until it's finally out. However, we can always talk about how the charts are looking here. Hadrien, very choppy the last 10 or 15 days, the sugar names. I'm just looking at Balrampur as a case in point, has traversed everywhere from 65 to 75 and keeps on moving up and down almost every single day. Would you trade the sugar names?
I would actually try to stay away from it because it's a lot it's a completely news driven kind of a sector. It doesn't actually see a lot of great buying happening, but off lately if you see, we're seeing a very good accumulation happening around between the 60 to 65 zone, and I think the stock has finally risen above that accumulation zone. One hurdle that I'm looking forward to on a Balrampur Chini is the 75 rupees mark, which is its 50-day moving average. So once we see the 75 mark being broken convincingly, I think that would be a trade a little bit more convincing, a little bit more comforting, because we'd be above that hurdle, and post that we could if we see that convincing move holding on to, I think then we can see Balrampur Chini getting into good momentum and moving towards the 82 to 85 levels in the medium term.
Okay, 2.5 minutes left to trade. Mayuresh, Joshi, if somebody wants to make an investment call, we've asked you a bunch of companies where we wanted your opinion. Now let's hear it from you. Anything that you are comfortable parking in money in these uncertain next few days, few weeks, few months?
So one of the stocks, Neeraj, that I probably like is Capacite Infra Projects. With a very strong order book in terms of 5,600 crores in absolute terms. The residential book is close to 4,600 crores. I think that gives a revenue visibility for the next 3 to 4 years. Again, I think in terms of what they've delivered in terms of financials over the last 4 years, because they operate with very good real estate developers, and because their working capital cycle is probably very well defined, you've probably seen a 50-58% top line growth, of more than 100% bottom line growth probably taking place. The balance sheet probably remains extremely strong. And when I was stacking this company up against its peers, something like Oswal Contractors, you're probably looking at PSP projects, you're probably looking at JMC projects. The EBITDA margin profile is far better. At the same time, I think what they're probably earning in terms of return on equity, at least at this point of time compared to its peers, I think it's significantly lower. So I think as the earnings trajectory probably becomes far more stable for this company going forward, and what they probably achieved and delivered in terms of top line and bottom line, if they're able to probably sustain that, my own sense is that the ROCEs can very well expand by 400-500 bips over the next 2 to 3 years. The ROEs can expand by 200 to 300 odd bips conservatively over the next 2 to 3 years. So again, I think strong balance sheet growth along with strong earnings momentum is something that I like. The only caveat here is you'll probably need to enter this stock in a staggered way over the next few weeks, so that reduces your impact cost considering the market volatility.
Okay guys, about 40 seconds to go. Hadrien, what's your top pick for the day?
Yeah, so I'll go with the safe Reliance Industries. Like Jubilant Food, Reliance Industries too is showing very good momentum on the upside. Trying to defy gravity, the sell-off that we are seeing across the board. So Reliance is something that I'm bullish on, and I think will move higher from here on. You can play for a target of 955 to 960.
Rahul, 10 seconds left. Your top call.
I think we discussed M&M, so I think I would buy M&M. I think obviously we discussed the fundamentals, so with a stop loss of 898, I'll buy M&M with a target of 960.
Okay, so those are the top 2 calls from our experts. Let's see what the markets are doing on open today. Expect a soft start, and it's a flat start. Yeah, a mild bit of softness as well, but not a cut off about 0.5% with the SGX was, or 0.25% with the SGX was indicating. But let's wait and watch. The mid caps and the small caps, which underperformed yesterday in a big way, starting off on a flat note. The small cap index already about 0.25% lower. Bring up the heat map and let's see. A fair bit of red, not too many losers. Dr. Reddy's, which has had some bit of gains over the last few days, some bit of course correction coming in on that one, but aside of that, it's looking very flat. No gainers either. Coal India is the top gainer. HCL Tech, so nothing, almost nothing happening on the benchmark indices. Let's take it straight to the stocks then, because the Nifty is lying absolutely flat. Bring up Biocon, arguably the man of the match, at least at the start of the trading session today, seemingly the man of the match, starting off about 3 or 4% lower, not really a 6% uptick as well. So that too is a bit subdued in trade. Maybe the day belongs to the losers. Let's bring up some of the key losers over the last few days. In yesterday's session, each of these stocks hit the 52-week lows and they continue to look wobbly. Jubilant Industries may be higher, but the other two are looking very wobbly in the session today as well. Let's talk about the stocks which are under the additional surveillance measures. And boy, that entire list continues to grind lower. Rain, Graphite, HEG, and I'm sure a bunch of others look very, very wobbly. 5% down for each of these. The volumes, I'm sure, will not be too great, as was the case yesterday. Agam, what are you spotting?
It is looking concerning when it comes to the broader markets because of the adverse advance decline ratio. But I'm going to start off with the gainers, and we do have sugar companies which are gaining. Bajaj Hindustan is one of them. It is advancing by as much as 3.8%, and Balrampur Chini is also advancing by around 3%. Some gains coming in for DCM Shriram as well from the same sector. For DCM Shriram, a large chunk of their revenues come from the sugar industry. Naveen Fluorine is doing reasonably all right. That's also up and about. It's about, well, 2%, and Vakrangri, of course, locked in an upper circuit. On the losing end, Neeraj has already mentioned some of these stocks which are hitting a lower circuit again. PC Jeweler, substantial weakness, another 7% cut, currently at 121. But I'm also tracking GVK Power, which is also trending downwards in terms of losses. And Gateway District Parks is down 3.8%, followed by Aban Offshore and Marksons Pharma. Each of these stocks losing out as much as 3% in today's day of trade.
That's not looking that great. Rahul, Shah, just opening thoughts from you before we let you go. It's a flattish start. You expect the volatility or the numbness, if I can use that term, to continue until the policy is out of the way tomorrow?
I think the market should be under narrow range, and maybe the weakness might continue. So that's what the call. I also feel that market should be till the policy is out tomorrow. We would see some kind of pressures and obviously volatility tomorrow.
Okay. Rahul, really appreciate you taking this time out. I repeat, on a short notice, thank you so much for being with us today.
My pleasure.
That's Rahul Shah from Motilal Oswal as well. Final thoughts from Mayuresh Joshi before we let him go as well. Mayuresh, a clutch of these liquor companies are coming under a lot of pressure, some for their own doing, some for other reasons. But, Radico, the smaller ones, stocks like United Spirits, United Breweries too, haven't quite looked comfortable, if I can use that term. What is the thought process here?
No, so a large element I've always maintained is that if really one extends the consumption theme to liquor stocks as well, I think there is a huge way to go. The second element in terms of what had actually transpired over the last few quarters in terms of the highway ban, in terms of what probably happened in terms of state elections and so on and so forth, the detrimental impact in terms of volumes was very, very evident. But what a lot of these liquor companies are doing and have been doing consistently has been their premiumization. So I think the above prestige brands is something that they are more focused about, because that is where the realizations are far more stronger, and that is where the margin impact also is far more greater. Having said that, the input cost pressures that one really realizes from the extra neutral alcohol prices, I think they're probably looking far more stable at this point of time. And it's the state hikes which can probably compel and propel the earnings momentums for these stocks. To a large degree, I think the kind of price movement that you've probably seen in these stocks constraining their earnings trajectory, I think the valuations had become far more expensive for the space as a whole. So I think I remain selective in this space, but I think one really needs to wait for declines, because valuations, in my opinion, still on the higher side.
All right, Mayuresh, we leave it at that. Thanks for joining us and giving us your views on the markets.
Thank you so much.
Well, and with that, we'll move on and get in another special voice today. We have Ajay Srivastava, Managing Director at Dimensions Corporate Finance Services, joining us on the show. Ajay, good morning. Thanks for joining us. Let me just start off with your broad-based view of the Indian equities. Crucial factors being the interest rate trajectory in the near term and, well, the crude prices which are bearing down. Keeping both these aspects into perspective, how are you viewing markets right now?
In fact, Neeraj, in the way the market is today, none of these factors actually accounting for much, given the fact that the regulatory overhang on the mid-cap space, that's the story of the day at this point of time. You saw the SEBI circular, which was withdrawn and extended till June, I think July 1st. That's what is causing mayhem in the market. First came the mutual fund adjustments, then came this circular, and the market is really fearing that is most of the mid-cap stocks are going to move to trade-to-trade settlements. Margin will become 100% as per in some of the stocks in as per the previous SEBI circular. So I think yes, there are issues on oil, there are issues on interest, but for the immediate time in the market, you are seeing tremendous pressure on offloading of leverage holdings of mid-cap and small caps. That's really the story of the day, and that's what's dictating the market, because there is a lot of preponderance of PMS in this, lots of preponderance of small buyers in these stocks, and I think the regulatory overhang has just knocked the wind out of the market, coming on a backdrop of anywhere higher interest rate, higher oil prices. So it became a, like a perfect storm. If you see the movie, three-way hit on this stocks, which has brought this market down literally to its knees, and I'm quite sure lots of portfolios are now bleeding pretty badly, and all the returns we made in the last 1.5 years is all gone. So I think story of the day is regulatory overhang on mid-cap rather than just interest rates or is oil prices.
Right, Ajay, this is Agam. My question then is it time to move in and add some positions when it comes to investments, or would you still wait for some of these good quality mid-caps to correct and then put in some more funds later?
It's again, the perspective is where you are. Most people are invested, so at this point of time, you could at best be averaging them, but I think hold your horses, because let this play out. I think it needs another 4 or 5 days for the mid-cap selling to come through in the system and get absorbed. I think that would be within the perfect state. You can buy today, there's no problem, but today also you're seeing lots of good quality stocks hitting lower circuit filters. So that takes away the urgency of buying some of these stocks, and we could see more pressure comes along as we see the end of the June coming and the new SEBI regular and adding on to the list of 100% margin companies. So my guess is that, yeah, if you really like something, sure, buy it, but I think it's still to play out. Give it a week or 10 days. Let things play out, settle down. Nothing is happening in a hurry. There are no new investors in this market. There are new buyers in this market. There is no FPI supporting it. So even if there is a turnaround in stock, I think you can get in pretty cheap early in the game when the uptick happens. There's no point of trading down when the slide is lower, going lower and lower every day. Wait a while, let the uptick happen. You may lose a few percentage points here or there, but that could be the time. I don't think time is ripe for you to delve in fully into knowing the value has lowered, because this demand supply is what is hitting. There are no buyers of mid-cap stocks, there are only sellers, and that's why the price cuts are steep.
Ajay, good morning, Neeraj here. You would have seen this a number of times play out in the past, right? When do cycles like these typically end? I mean, is it a time-bound factor, or is it an event-based factor? And can earnings, which are likely to come back in FY19, change the mood around here, or would it be some other factor which would lead to this?
I think very valid point, Neeraj. What will change this around? I think earning is the last thing we expected to change it around, because in the backdrop of the interest cost, in the backdrop of rupee dollar, a devaluation of foreign currency loans, which are write-offs going to come, in the backdrop of the general cost increases, inflation coming through, salary increases coming through, I doubt very much is going to be the margin. I doubt very much is going to be the earning. I think what might happen here is that simply the supply exhausts itself. At some point of time, the market capitulates and there are no more sellers in the system, at which is the time to start coming and nibbling into the buying. I don't think it's an economic variable. I think it's a pure demand supply situation today, that you got good companies at very cheap value. So it's not that earning will make a difference. I think we need buyers in the market to make a difference. So this needs to play itself out in terms of time. And when the selling exhausts itself, you will find that the value has come back to the table and you should be out there in the market. Don't think earning is going to drive this market.
Ajay, you would be speaking to a bunch of HNIs, some who invest through you, some who invest by and large in the markets as well. So we know that the retail inflow into mutual funds is still as it was, almost as it was, at least the SIP flow is, if not the lump sums. What about the HNI category, which was a big part in 2017, investing into PMSs and that flow into these mid-sized companies? Has that ebbed, or is it still continuing as strong? Or conversely, are people even pulling out some money from PMS schemes? Have you heard anything to this effect?
Okay, Okay, nobody's pulling out money, but I think definitely the inflow into new PMS scheme has dropped to a trickle at this point of time. Lots of new money is waiting on the sideline. So I don't see major increases happening in terms of the PMS, large HNI money. I think it will hold on the sideline. And more importantly, now for the first time, we are seeing that debt is becoming attractive to these HNIs, because if you look at the schemes come up by 2 companies and more will come in the market, you will see good quality paper available at good interest rates. So I think you will see a diversion of money towards interest rate products, fixed income product at this point of time. Earlier, 2 years back, it was almost 100% equity. Today is going to be divided 60-40 or 50-50, etc. So one, clearly there is now a preference toward balancing the portfolios of putting in debt in it with attractive interest rate. Now, coming to SIPs and retail, I think that's the large mass, and I'm sorry to say they always lose money in the end. And the reason being, they're too late in the table to change their portfolio choices. They're too late in the table to kind of look at their situation, because incremental outflow is like, this slow boiling of the crabs. You never feel the effect till you see the end of the 3 years, what kind of money you made. So I think there the problem lies that by the time people will react, it will be too late for them to retrieve their portfolios. I think they are the ones who need to be more alert, agile. And HNI can take a hit in a year or so. All of us can take a large hits in year 2 and survive and do well in life. But I think the retail portfolio needs to be very careful, because for them to retrieve losses is very, very difficult. So I think it's not a symptom of the fact that there's strength in the market. It's just the sheer inertia of retail investors to change, to reorient, and do something to the portfolios. And most retail people, and I'm telling you honestly, don't want to read the newspaper. They don't want to see the statement. When the statement is negative, or they say we are in the long term, so put it in the bottommost drawer of it. You don't want to look at the bad news. So I think it's important. Please look at your portfolios. Please look at reorienting them, realigning them, because it's hard-earned money at the end of the day.
Right, Ajay. You did speak about the mid-cap rally, or rather the mid-cap correction playing out completely. In that case, if and when it does play out fully, what are those pockets that you would like to be interested in dwelling into?
Straight away, infrastructure companies. I think mid-cap infrastructure companies are going to do tremendously well in the next 12 to 24 months, because the flow of orders is very good. Government will try to come with all guns blazing in the election year. So you will see this 10 to 12 infrastructure companies doing tremendously well in the next 12 to 18 months. I think that's one big segment. The second big segment, I guess, would be coming from the space called consumer space. I think there will be lots of M&A activities, lots of push through happening in the system. So you will see the mid-cap, footwear companies, the mid-cap consumer companies, mid-cap food companies. These are start going to play out. Of course, the other aspect is why it's getting so much more hurting in the mid-cap space. The auditors, the quality of the financials. Now they also need to come and stabilize, because you can't have a 1% again and again. That's or a PCJ happening again and again, or a Vakranji happening again, because that tells you, it just kills the faith in the mid-cap story of this country, transparency. So I think even there should need to be a response from the government side on the regulatory aspect on some of these companies, exemplary punishment if people have hidden documents, etc., and restore the faith in them. So I think that's going to be the key. But I think infrastructure companies, mid-cap, will drive this rally back in the market, because they're attractively priced, they've got good order book, good cash flows, by and large reasonably debt portfolios. They should do the best in this market when the turnaround happens.
Interesting. Ajay, one final thought really, and that is on, I think you started off saying that this additional surveillance measures and a lot of these quality names are down 5%. I'm guessing you were referring to that end of the market. I'm kind of stuck with that right now, asking everybody about the same. There are some fairly decent quality names wherein the managements recently have projected fairly decent earnings growth over the course of the next 12 months at least. Do you think at some point of time the market will separate the wheat from the chaff? Because right now, almost everything from the goats to the lions are getting butchered.
Goats to the lions. Well, the answer is really speaking that, you're right. At some place, it will be your market will look at them separately. But that's not the problem. The problem here is people sitting on leverage positions. Now, where do they go? They need to liquidate the loan. They need to go, and before the SEBI come with a 100% margin stipulation on most of the companies, and some very good names were part of the original list of SEBI. So it's not that the bad ones were in the name. Some very, very good quality names were in the list. I don't know how the list was formed. Maybe that would need more deliberation perhaps. But the fact was, good quality name in that list. So if you got shares which have to be bought on 100% margin, it doesn't matter what quality you are. The depth of the market will shrink in those shares, and the price recognition, the price discovery will get vitiated. It doesn't matter how good you are. If you are in the list, you are in the bad list.
Yeah, well, okay, that's very well said. Let's see as and when it happens. Ajay, always a pleasure talking to you, and thank you so much for taking the time out today and speaking with us and give us some very valuable insights, Ajay. That's Ajay Srivastava of Dimensions Corporate Finance. We need to take a quick break on the note that the index is a lot lower than what it was when it started off, just about 0.25%, but lower than what it was when we started off. Take a break, come back with the big newsmaker. Biocon and Mylan's biosimilar gets the U.S. FDA approval. We connect with Kiran Mazumdar Shah.
Finally, what Biocon has been waiting for, the big approval for pegfilgrastim has come in. Overnight, the U.S. FDA has approved pegfilgrastim. It's a drug that was jointly developed by Biocon and Mylan. To take us through the important development and what happens next, we are joined by Kiran Mazumdar Shah of Biocon. Good morning, Ms. Shah. Thank you so much for speaking to Bloomberg Quint. First of all, congratulations on your big achievement. But we know what exactly has happened. What's the way ahead? What will happen next? What's the launch pipeline, and what's the launch timeline that we have for pegfilgrastim now?
Well, pegfilgrastim has an imminent opportunity to get into the marketplace. And I think this is a huge milestone again for Biocon, as you very rightly put it, because this is now the second biosimilar that has got approval from U.S. FDA. And as you know that in both cases, we are the first biosimilar in its category to be approved. So it was first biosimilar trastuzumab and now the biosimilar Neulasta. And as you know, many companies who have actually been working on the similar molecules have still not crossed the finishing line. So it tells you how complex these drugs are to develop, and it also reflects the competence and capabilities that we have at Biocon.
Ma'am, what's the expected timeline for launch? Mylan has said that it will happen in the coming weeks. What's the view at your end?
Yeah, so I think, as we said, it is imminent, and, we will be prepared for imminent launch, and we will be getting ready for how soon we can get it into the market.
Okay, it's a big drug, $4.2 billion according to the statement that was released by you. How much market share can you expect to garner in the first year, and what's your assumption of a price erosion?
I don't think I would like to basically make such comments because I defer to Mylan, who is really front-ending the commercialization. But suffice to say that Mylan will try and garner as much market share as they possibly can, because we do have a first-mover advantage, and we will try and make the best of it.
Okay, any details of how much price erosion assumption are you considering?
Not at this point in time. I do not want to comment on that.
Okay, fair enough. In terms of ramp up of this drug, how will that be? Will it be gradual? What's the strategy there?
I think, all these questions are something you should ask Mylan, because I think they are the commercial front end for this product, and it's not right for me to comment.
Okay, so I'll ask something that is more pertinent to Biocon at this point of time. Can you give us the financial agreement that is there between you and Mylan for this drug? How much percent of the revenues or how much percent of the profits that you will be getting, and what kind of margins you will be making on this drug?
As you know, from a revenue point of view, it is going to be Mylan will really book the top line revenues. Biocon will basically be getting a profit share, and the only revenues we can book is the supply of product to Mylan.
Any idea on what EBITDA margins will be you be working on this drug?
Well, obviously, you can imagine that these EBITDAs are very attractive and very lucrative, and that is why we've been investing so much in biosimilars, because we believe that these are very attractive drugs to develop. And, certainly for the foreseeable future, I think biosimilars will see very low levels of competition, and therefore we believe that we will be able to have very rich EBITDAs.
Okay. Does this, allay any concerns on the Bangalore facility? Because a lot of questions were asked when you got 7 observations there. Does this allay anyone who's having any concern on the working of the Bangalore facility?
Well, first and foremost, I think, people who comment on 483s need to understand what these 483s are about. If you looked at the comments made by people who understand the 483 significance, clearly said that these were just not significant and these were not material and that these were more in the nature of continuous improvement. And the fact that we've got approval means that the audit was found satisfactory.
Okay. Are you prepared capacity-wise from the Bangalore plant to supply whatever Mylan needs in this drug?
So we are going to continuously make sure that we put in capacity to support every one of our biosimilar needs.
Okay. Another important question, and you spoke about this, is the second approval that you've got. The first one was trastuzumab. I think the street wants to know from you what kind of EU approval timeline can we expect for trastuzumab?
Now that is something I really can't give you any optics on. We've gone through an inspection and we're hoping that EU will give us an early approval. But it's something that we really won't know much about till we really get optics on how they're looking and reviewing our dossiers.
Okay. And my final question, Ms. Shah, and this actually came in one of the international dailies yesterday overnight, and just wanted your comment. I don't know how authentic this is, but it says that FDA rejects Mylan and Biocon's follow-on insulin glargines referencing Lantus. Can you care to comment what this is regarding?
No, this is basically talking about a complete response letter that we received because, as you know, we had a 30-month hold. And as a part of that, we decided to include our Malaysia facility. And we had a discussion with FDA, and it was very clear that a CMC bridge was not going to suffice and that they would need a clinical bridge. And therefore, we decided as a part of this 30-month hold that it was in our best interest to actually, anticipate a CRL, but do a clinical bridge so that we have the right capacities with which to address the market. So this is something that we anticipated. It's not that it's been rejected in an outright manner. It is something that we have anticipated and proactively working on to make sure that all our facilities are approved by U.S. FDA, ahead of the 30-month, approval timelines that we are looking at.
Okay, Ms. Shah, we'll leave it at that. Thanks so much for speaking to Bloomberg Quint, and once again, congratulations on the big achievement.
Thank you.
Well, not too much of the details divulged, but Darshan tried his best to try and get almost all necessary points coming in from Kiran Mazumdar Shah. The stock of Biocon has cooled off completely after starting off the pre-open session in a very positive way. Okay, moving on to newer conversations. It may be time to go back to the drawing board and rebuild your portfolio, says Kenneth Andrade, founder and chief investment officer at Old Bridge Capital, as euphoria gives way to caution. He believes the days of singular moves are behind us, and it is for this reason that the investors must go back to their portfolios and decide what investments to stick with and what to exit. Listen into this very special conversation on navigating through uncertainties.
You're moving from euphoria to a little bit of uncertainty. You're moving from a period of surplus liquidity to a period of a slight bit of caution. And obviously, both these events are completely different, or both these situations are completely different. The mindset will change. The mindset today is to look for pockets, not to look for pockets of opportunity, which was the mindset that was about 18 months back. The mindset today is to navigate these pockets of uncertainty that is there. So obviously, high price earning multiple stocks are giving way. Businesses with slightly a dodgy business model are not doing too well, and all of that comes in once liquidity is slightly uneven in the entire system. So that's what we're essentially seeing over the last couple of months.
You must be loving this, right? I mean, the first interview that we did on Alpha Moguls, you said that don't mind, but I'm a guy who likes stress in the system. You must be loving these times.
From an investment environment basis, it's great, but no one likes to see their own NAV go down, right? And I think that's the absolute truth that is there. What we've been used to over the last 5 or 6 years is a singular, or it's a unidirectional move in indices, in NAVs, and ability to make money. Today, you're getting more of a consolidatory move, and whether you're a great fund manager or you're a good stock picker or not, you have those pockets that exist in your portfolio which you would want to revisit at points like this. So it's business as usual. It's a little bit more fun right now because you get time to do all what you wanted to do, and in the more practical sense of the word, make your portfolio more robust for the next couple of quarters, years, or.
Okay, so would you explain that? You know, I've heard this you mentioned this I think in an interview that you gave last week as well, that you now get time to put the processes in place, and right now you're saying that you get time to do what you want to do. Yeah. Is this because there is a price and a time correction that is happening, and therefore the opportunity is not running away? I mean, what are you trying to say when you say this?
So in my past experiences, and we've seen a lot of markets correct themselves and come back, and correct themselves and come back. But in most portfolios, what you have, which is going to be material, right? And you only have to wait for it to come back. You can't go into a cycle. So let's look at what happened in the last cycle. You had this large infrastructure rally that took place, and in the next cycle, the infrastructure refused to come back. It just didn't come back. And that's got nothing to do with stock prices. What effectively happened in any industry or any business where you have massive euphoria taking place, a lot of capital gets accumulated in that entire system. Okay, and the guy who gets capital the last is usually using it the most inefficiently. Okay, but at that moment in time, his valuations are stretched out. Okay, and then once the environment consolidates itself, some of the bottom end of the businesses refuse to come back.
Right.
Okay, so what is very important is where your portfolio is currently positioned for it to come back. If it's and in most cases, I think most investors or most professional investors make the mistake of staying with legacy companies that are there. That's probably the only way to navigate an environment like this. So, if you look at our perspective, our perspective of investing process, we basically rely on arbitrage of capital efficiency. So any business that requires enormous amount of money to grow, or demands incremental amount of capital to grow, is going to be less efficient as time goes by. That effectively means that your return on capital employed or return on equity is going to go down because the denominator is bloated up, and your expected returns over a period of time. That's the place that we try to avoid. And usually those are the companies, that's the space that has where a lot of investors have polarized capital around. So when I say we need to revisit most of our portfolios, or try and establish incremental amount of conviction in most of the portfolios, that's necessary. Why you have to open up your entire portfolios, look at businesses that you've gone. There's a high probability that you still like them. Okay, and that's why you increase your conviction and ride into the sunset, if I may say.
Right. Okay, interesting. Yeah, I want to talk about this thing as well, about the return ratios and how they would do in FY19, but just before FY20. But just before we get to that, a couple of pointers on on the macro and how it might impact as well. And there are kind of loosely put conflicting cues out there, right? The macro by and large is not looking all that favorable because of what oil has done. Never mind what's happened the last couple of days, the dollar strength, the rupee weakness, etc., so on and so forth. But the GDP numbers, the print at least, seem to be fairly encouraging. The GST collections, while may have missed the mark, but broadly showing a trend of some bit of an improvement there. How are you looking at this piece of the puzzle for the next 12 months?
We come out from an environment where macros were extremely good and micros were weak. Today, if I look at it on the ground, the micros are phenomenally better than what they used to be in the last 5 years. And there are hiccups on the macro side. But that's not unexpected. If you go back last year, everyone did talk about the elections. When you went into the budget this year, we've slipped up on our fiscal. So all of this was coming. You've got the joker in the pack, which is oil, which always comes in when you don't want it to come in, right? And it's there. So this is something that we'll have to navigate through. And it's a commodity cycle, so commodities do weaken over a period of time. And this is just a process. But I'm not too worried so much about the macros in the near term. In the near term, you've got elections coming up. Even if you do have a fragmentation at the center of the worst case scenario that takes place, you'll still stretch that by a year or two. But unlike the past, the micros are very robust. So banks are actually cleaning up the legacy assets, which is 2013 or 2014. There's nothing new that's incrementally come on book. So whatever is there is historical assets that are there. Companies don't have too much of debt on books, okay, and they can navigate anything. So the first thing that you do is look at company balance sheets, and they're more sound than they ever used to be. Okay. So I think that's the opportunity subset that we look at. Now, how are you going to price all these assets? That's the question mark that we all are looking to establish. Last year, if you look at it this time, exactly a year back, markets were trading about 21 times forward. Today, if you look at it, this 1 year later, it's close to about 18.5, 19 times 1 year forward. So you've essentially seen the derating of equity as an asset class. Okay, everything remaining the same, markets growth coming back in the cycle, markets are derated themselves. So this may be a 2-year process, it may be a 3-year process. Okay, which is very important to go back to where we first started off. What's your portfolio construct? Are you in a business opportunity? Are you in a business environment which is consolidating, and incremental growth of ROE is going to be superior with enough amount of growth? All of that is going to come if that industry is not competitive or if the industry is not fragmented.
Of course, you can catch this entire kind of conversation of navigating through uncertainty at 10:30 a.m. today. Okay, amongst other things, it's always good to touch base with companies in the auto space which are doing reasonably well. The May total sales for Escorts, domestic sales were up about 19.5% at 8,087 units. Exports were up about two times. Remember, that's a low base. And the total tractor sales, therefore, about a 20.9% mark higher. But compared to what Escorts anyways does, this is par for the course, probably. So what happens from here? And with the farmer protests and all that's happening in the rural economy, can these numbers continue? Let's pose these questions to the company's Chief Financial Officer, Bharat Madan. He joins us right now on the show. Good having you, Mr. Madan. Thanks so much for joining in. Satisfactory month of May. The last time that we spoke, you mentioned that the double-digit growth will continue, but the base being higher, people should not expect what you've done in the past to continue. Somehow that is continuing.
Yeah, I think our guidance for that first quarter definitely will give better growth numbers. So I think our expectation of industry will go somewhere between 15 to 18% in Q1. And probably this time, again, looking at the numbers, looks like it will be about 20% around for the industry numbers. So, but yes, overall for the full year, we still maintain the guidance of somewhere around double digits, 9 to 11% sort of growth possibility. Looks like more realistic number for the industry now.
So is this a natural course, Mr. Madan, or do you believe the other factors? I mean, there are a few states where there have been reports of farmer protests since produce prices have been low, and all of these factors which will impact tractor sales.
Yes, when you look at the May data also, I think those particular states which are under stress, especially states like Rajasthan, MP, Maharashtra, and Karnataka. So these 4 states haven't done well. So I think in terms of volume, they are obviously slightly degrown. But given the good indication for the monsoon, especially in the western belt and the central belt for MP, Rajasthan, that they should likely pick up. Though I think in the south will still remain some sort of concern looking at the guidance, though actually how the monsoon will pan out. We'll have to wait for the distribution pattern to emerge clearer. But overall, still, I think in the other region, we see very strong good growth happening. So we expect, I think the trend will continue. So we'll have really good numbers coming from the industry this year too.
Mr. Madan, you would have seen various such cycles wherein due to one reason or the other, there are some protests which last for a week, 2 weeks, 3 weeks, or maybe a month. Typically, do sales bounce back immediately in the next month onwards, or does it take some time? I know every situation is chalk and cheese, but just trying to generalize it anyways.
I think the agriculture cycle is what it is. So I think if the sowing season starts, obviously there's a limited window for the farmers to really start investing in tractors. They really want to use it for their cultivation purposes. So I think that window definitely is a peak season month. So May, June normally seen a buying season which is there. So that will remain. So irrespective of whatever stress is on the farm side, I think obviously those issues are something which probably at the macro level the government needs to address. But otherwise, I think in the general we don't see there will be major impact happening on the demand side really.
If my memory serves me right, Mr. Madan, the last time that we spoke, you mentioned about some price hikes that you undertook, token ones at the end of March, beginning of April, if I'm not wrong. What's the price situation like? Are you looking at any further price hikes?
So we still got some lag which we need to pass on. So obviously we had taken a price increase in April. So, but still I think this inflation is continuing in this quarter. So normally we pass on the price increases to the market with a lag of about a quarter. So obviously this quarter's impact is still to be passed on. So we still are carrying a lag of about 1%, which needs to be passed on to the market.
You would reckon you'll do that in the month of July or August, or would it happen in this quarter itself?
No, not in this quarter. I think it'll be mostly in next quarter, Q2 only.
Okay. Albeit on a small base, exports have shown a reasonably good bump up. Do you expect the momentum to continue?
Yeah, the export we're expecting this year, we should see about 50% growth. So I think that's the guidance which we're given to most of the analysts and investors. So I think that's the momentum I think we probably should continue going forward too.
Okay. Mr. Madan, great having you. Thank you so much for taking the time out and speaking with us today on Bloomberg Quint.
Thank you.
That's Bharat Madan, Group CFO of Escorts, expressing confidence and optimism. Let's see. But of course, cautious optimism, saying that the sales will be for the year would be about 9 to 11% for the first quarter. It's about 18 to 20%, and that's what they're showing. I think he was speaking for the industry for Escorts, maybe a bit here and there, maybe a bit more than what the industry numbers could look like. Okay, just before we wrap up the show, just a quick detour back to what the markets are doing. Tech Mahindra and HCL Tech are leading the charge. Maybe courtesy the Credit Suisse report or otherwise, but yeah, those two are up. But IT by and large seems to be doing okay, because I think I've seen Wipro somewhere about 0.5% higher too. So IT might be doing okay. Reliance, 2 days on a trot now, is doing well. Yesterday was up about 1.5%. Today is up about 0.5% as well. So good going there. On the flip side, what's correcting is Power Grid down about 3%, and Indiabulls Housing after a 5% downtick yesterday, down another 2%. Remember yesterday, almost everybody on the show and countdown mentioned that it was a good STBT candidate. So you probably made your money if you did listen to that advice. What's looking weak at the broader end of the spectrum? All of these companies which have caught under the additional surveillance measures or otherwise. So Radico Khaitan is down 5%. Not under ASM, but down about 5%. Rain Industries under ASM down about 5% in trade. Some other names and stronger names hitherto include a Sterlite Tech, which is sub 300 now, 294, so that is looking slightly weak. Stride Sashun is corrected again, another 3.5% down for that one. So fair bit of pain at the broader end of the spectrum, not seeing too many stocks which have gained too much. Balrampur Chini and Bajaj Hindustan, amongst other names, seem to be doing well for themselves. So 5% for Balrampur Chini, 4.5% for Bajaj Hindustan. Sugar as a pocket seems to be wielding some strength in the session today. Time out on this leg of Indian Open from me, Neeraj Shah, and the team that put this show together. Thanks so much for watching, but stay tuned. The FNO show takes forward the action on the other side.